daily S&P 500 chart and a weekly S&P 500 chart. One of the things that make moves ahead of time is that institutional people that have stop market orders in the market, hedge fund managers and the bigger community, is that the daily top is where we called it at 1370 here. And we've come down and we've had the daily reversal started right here. We make the bottom right there at 1330. The volatility in the S&P is going to be here to stay until the end of the summer. We bounce back up to that 1360 and we've had that reversal, which means that this prior low right here where this breakout has happened, when you come across here, what we're going to be looking at is on Monday, if we don't recover at these daily simple moving averages, and if margin debt selling is increasing, the S&P, meaning margin requirement increase, and people that have stop market orders, is where's the biggest selling going to occur? It's going to occur right here. Now, on the other hand, when we go back to where we said we made that top, that's that first distance of selling that we had on this chart here. And it's a 30-minute chart at the S&P 500. You can see that this reversal here happened on 510. This is the original reversal. That counter rally, everything has a counter rally. It started with a gap. It held here, but look at here. We made a lower low within the counter trend. Not only that, and it's all on a 30-minute. So you're going to have directional movement and volatility, but we slide off to the left. And if you want to know the truth, look at the highs here. So when you have counter trends, that's naturally you cash in your profits on the bear ETFs. And when you do have counter trends, you go long the bull ETF within the longer, broader cycle. We are going to be at a very critical area right here. On Monday, if we sell through, we can see here clearly, look using a 30-minute over all of the days right here. Weekends don't count. And the S&P 500 is subject, here's the last bottoms at 1330. So basically on a shorter time frame, we can clearly see that these volatility runs off the bottom, because volatility is here to stay. But every time we make a volatility short squeeze in the index or some kind of headline comes out, they're failing and rolling over. And this is what it looks like on that 30-minute level. The daily is confirmed. You're selling through the daily moving averages. And I've already showed the weekly. The weekly chart down here is going to have a little bit different tone to it. Yes, S&P 500 weekly, what we'll be monitoring is the S&P makes its top here. This is where we said we were going to have a correction, and how far it goes, we'll let the buyers and the sellers figure it out, other than we have one going. So if we come down to that 10-week and that 20-week here, and we start to sell through these weekly moving averages, meaning that if there's a sell through, then we're going to go lower, and we're going to come down to this last low, and we're going to sell through those. Now, on the other hand, in volatility, you can certainly make another high. How would you know that here on the weekly? You'd come down and hit that. You would bounce, but to know that the volatility, upside volatility, can increase, because this current high right here is going to be the major one right here, this high. So basically what I'm trying to tell you is, MMTs, that we can bounce here and challenge the high and roll over. Volatility is going to be here both to the upside volatility, but so far upside volatility is being met with the next sell. 5 week or 1 week, that was when the selling started. This was your counter trend. It's a narrow range week. So these key weekly moving averages are very important here. Okay, so if they don't bounce and we sell through, then good shorts are going to be working. Good bear ETFs are going to be working. This is going to be the trade management. Summer volatility on the S&P 500 is here to stay, both in the correction side and the upside. The thing about these corrections when they happen is we did make the higher high in volatility. We called that 4-week correction. It was time to get long. Monday is coming. these weekly moving averages are at risk. Either you're bouncing on support and volatility or you're selling through on volatility